DSP Mutual Fund has launched DSP Nifty Smallcap 250 Quality 50 Index Fund. This fund was launched on 5th December 2023 and ends on 15th December 2023. Allotment date is 21st December 2023 and NFO offer period is 10 rupees. There is no entry load or exit load as this is index fund. And minimum SIP is 100 rupees and minimum first time investment is 100 rupees and minimum second time investment is 100 rupees onwards. Tax is applicable to this fund. Short time capital gain tax and long time capital gain tax is applicable. Short time capital gain tax is 15% and long time capital gain tax is 10%. This fund is similar to small cap fund, slightly different that instead of investing in small cap index that is 250 stock, they will selectively invest in the 50 stocks. This approach is called Nifty Smallcap 250 Quality 50 Index Fund. If you look at this data, usually we called first 1 to 100 stock as a large cap stock and 101 to 250th stock called mid cap stock and then 250th onward stock we are calling small cap stock. Small caps have the potential to generate higher benefit compared to large cap. However, the fall from the top could be the higher too. Risk will be higher, however, you get benefit higher. If you look at this chart in 2008 share market crash, small cap has fallen 75%, but whereas Nifty 50 has fallen only 60%. In similar way, in 2020, small cap has fallen 59.4%, but whereas Nifty 50 has fallen only 40%. At the same time, if you look at CAGR return, that is compound annual growth rate is 15.17% for small cap, but in large cap is only 14.1%. So this chart clearly shows us, however, you will get higher benefit at the same time you will have the risk. But why we are all interested in investing in small cap stock and searching a small cap stock or more interested picking up small cap stock? Let's look at this chart. This chart clearly shows us the multi-bagger from large cap, mid cap and small cap stock. If you look at 3x, 4x times multi-bagger stock, in large cap we have only 9 stock and in mid cap we have only 13 stock. But whereas in small cap stock we have multi-bagger 3 time, 4 time multi-bagger stock, we have 69 stocks in last 5 years. At the same time, 4x 5 times of multi-bagger stock, in large cap we have only 1 stock and in mid cap we have only 7 stock and in small cap we have 35 stock in last 5 years and more than 5x times multi-bagger stock. Large cap we have nothing and mid cap we have 7 stock and in small cap we have 71 stock that has given more than 5 times of return. In this chart, you can notice that 3x, 4x, 5x and more than 5x is nothing but it is number of time it has given profit to your investment. If you invested 100 rupees and it gives 200 rupees, it is 1x multi-bagger. That is one time multi-bagger. The same time it gives 300 rupees, it's called 3 times of your return, that is 3x multi-bagger. The same way, if it gives 500 rupees, it's called 5x multiplier, that is 5 times of your return has grown in a short period. This is the reason everybody looking for small cap stocks. Opportunities are more in small cap stock that will grow than mid cap stock as well as large cap stocks. At the same time, we have risk as well. We have higher number of stocks with negative return over the last 5 years. In large cap, we have 14% of large cap stocks giving negative return in the last 5 years. And in mid cap stock, 17% of stocks given negative return over the last 5 years. And in small cap, 21% of stocks giving negative return over the last 5 years. In previous year, we had couple of wealth adding stock. In quality index, we had 2% of wealth erratic stock like number of 5 stocks, for example, Syndex and Rolia. But in the board of index quality stock, we had 16% of wealth errating stock like 81 stock, example, Videocon and Kingfisher. So what happened to Syndex one? For example, Syndex was a loss-making company and they sold it to Reliance company. Reliance has taken over this company and started running this company. But what happened to the investor? Investor they lost their money. Whatever they invested, entire thing was gone. All of them are lost their investment. For example, if you invested 10,000 rupees to Syndex Star, you would have received nothing. 10,000 rupees you would have lost this stock. That is why DSP has brought Nifty 250 Quality 50 Index Fund. They will select Quality 50 stock under some criteria like they will include stock on return on equity, debt to equity, and earning visibility. They will analyze these things and they will start investing. And they will exclude stocks based on these criteria like higher pledged promoter holding, less liquidity stock, very high valuation, higher volatility, and minimum listing history of 1 year and critical breakers. Let's look at the top 10 stock holding in Nifty 250 Quality 50 Index. CDSL, that is Central Depository Services sector in financial weightage is 4.44%. IEX, Indian Energy Exchange Limited sector is financial weightage is 4.44%. Sonata Software sector is information technology weightage is 4.40%. Castrol India sector is mineral materials, weightage is 3.18%. Birla Soft Limited sector is information technology, weightage is 3.13%. JB Chemical and Pharmaceutical sector is healthcare, weightage is 2.88%. KEA Industry sector is industrials, weightage is 2.85%. Sanofi India sector is healthcare, weightage is 2.76%. National Aluminium Corporation Limited sector is material, weightage is 2.75%. And finally, GNFC Gujarat Narmada Valley Fertilizer Chemical sector is material, weightage is 2.73%. This kind of small cap fund may give higher return in a shorter period, but as well as you will have the higher risk at the same time. This video is only for education and knowledge purpose. Before investing this stock, you can research your own. Thanks for watching this video. Keep on watching RN Millionaire YouTube channel to get useful video like this.